Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Thursday, and we are now January 3rd, 2019, and we're just after 4:15 p.m. Central Daylight Time. Need I tell you more? Yesterday when we were doing the update, I said, you know, Apple's earnings came out, and while the market had finished on Wednesday about 50 higher, I said, I'm telling you, the last trades of the day were about 100 and some odd lower. Well, you can see the follow-through. The world looked at it, and I think the world has given a watershed event, and this is what I believe, to $1,200 smartphones. You don't have to agree with me, but I'm questioning if we just haven't got to that point where it's time to commoditize the value of those. Doesn't matter. Gold up, silver up. Why? People scared, and we had what's called a flash crash, but in inverse. In other words, the yen shot up dramatically, and while it only closed up 124 points, that's monstrous, from its high, it was another 115 or so higher. That is a dramatic move by any stretch of the imagination. The dollar felt the pressure of that, but it was primarily currency pairs, where the yen against the Aussie and other currencies like that, that really people just got stepped on. And of course, the bonds and notes continue to go to the upside. Now, the president just completed a news conference, maybe at 4 o'clock, 15 minutes ago. He's doubling down on the wall. So the new House of Republicans under Ms. Pelosi, second term, congratulations, by the way, for her. That is an event. I don't think they're going to get too far with this president on this, so expect that the government shutdown stays in place. You can see how the market and the S&P has responded. Going from 2934 on a weekly chart, we're now down nearly 500 points from there. As you take a look at the chart, yesterday we had what's called an outside day up. Today, you took out the low of that. So unless you immediately come back and take out the highs of Wednesday, the odds favored that this action was a rally high, a trap for the bulls, and now the market is under pressure. I'd be wrong, obviously, if you get up and close over 25.23, but right now you've put into play again. You removed this arrow that was pointing up because you took out the low, and the swing line will still have lower highs, lower lows in effect, resistance at the 18-day average of closes, potential support back down at the lower Bollinger Band near the 2366 level, and momentum to the upside has now flattened itself out. So in summary, the trend is down, the bias is down because you're under the 18-day average of closes. You negate the swing line pattern without any other fare if you take out 25, 23, 90. If you drop from here, potential support back at the 2366 level. The Nasdaq, let's take a look. I left this one so you'd see it. If I can show you one of them that does these things, it's good. This was an outside day up yesterday, so I would have said lower highs, but now you come out, you take out that day's high. When the swing line like this, and you take out the low of an outside day up the very next day, it continues the line down, so I actually would have to take this arrow and put it back pointing down here. Again, lower highs, lower lows. You've got a trap going on in this market. The Dow did the same thing, and here I've pointed with you for the arrows. Lower highs, originally I would have thought that would be up, and resistance at the 18-day average. You caught the people. So now momentum to the upside in all these indices is backed off. The only market that didn't take out the low of the outside day up on Wednesday is the Russell, but now with the current pattern, it's an inside day. If the market takes out 1323.50, this low right here. What happens is the swing line will have lower highs, lower lows, momentum will likely turn down, a full-fledged sell signal, whether it's right or wrong, can be generated on that chart pattern. In the VIX, the battleground is again the 18-day average of closes. That's often where a market looks to see what it's going to do next. No question the market is in oversold territory. And it was interesting today with the whole stock market falling apart around it, that all you were up on the VIX was 2 full points. Interesting day there. In the bond market, you're extending this rally with an embedded reading. You are overdone because you're over the upper Bollinger Band and you only stay over that band 5% of the time. We've now got 2 consecutive days over it. When you come to the 10-year note, you were over it today. You were over that band yesterday, if I'm correct. And now we were, I don't know if right here, 122.05, yeah, there, but not here. So you got 3 days in a row over it with the embedded reading. All that this means is that the market is displaying extreme strength, but at any point, anything can happen. What can happen in these markets between the bonds and the notes tomorrow? Unemployment data. When we see the report that comes out on the employment, I should just call it the jobs data, is it going to be strong or weak? You do realize a really bad number could set this market off, and I mean bad being that it's a weak number, saying, you know, we're watching the ISM data, PMI data is coming out everywhere, everything's weakening around us. That keeps that bull note going. How many analysts are now saying no rate hikes in 2019? It's only January 3rd. What if you have a Chinese trade deal? Can't that change everything? Wouldn't the tone change? I mean, there's a lot going on right now, but I understand. The market's run, but it isn't an extreme. TLT, up and over for the first time, the upper Bollinger Band in an overbought condition. I think pros, and I'll go online, taking money off the table today. First challenge of that band. In the dollar index, notice that the market yesterday rallied back, settled over the 18-day average of closes, and today the market hits that number, backs off. That's your battleground now. And as we were saying, which way is the next move in the dollar? That's why you're getting this. Traders are trying to figure out what is the next direction of the US dollar. The yen is gone to the upside. That doesn't mean the dollar is going anywhere, especially if the U.S. interest rates aren't going higher and our economy is slowing relative to others. In the euro, this is yesterday's action. You had follow through this morning. Remember what I say, the first time you hit a lower Bollinger Band, look for the odds favoring. Pros are going to take money off the table. You hit it here, got down to 113.77.5. The Bollinger Band 113.83, let's call it, and a half, comes all the way back up and hits the 18-day average, closes just under it. British pound, from high to low in these Bollinger Bands, got to be careful when you see this. You hit the high, this was yesterday, today you come for the low and you come back. That is why what I tell you here, it's what I teach in my charting course, and there's much more. The things you're seeing here are tips of the iceberg of what I teach. They are not nowhere near the intent. The intent is to get you take the course and you really start getting online with what we're doing. So then we get to the end. I mean, just take a look at what this market has done. Yesterday, the market was up 39 points. Today, it wasn't up that much, only 124. But from where it was, this was a market just a couple of days ago at 90.39. You've added 300 points in this market. It's monstrous in its size. It has the embedded reading. It's got a couple of days now where it's over the upper Bollinger Band, so the odds favor it'll pull back into it. Bitcoin, just total sideways action. Bottom or top? I'll let you try to figure that one out. Right now you have a pattern of lower highs and higher lows. It's not giving you an idea just yet. A close under 3,600 would be an indication the market wants to, what? Start coming down again. That's about all I can see on the chart. As for the upside, you've got to get up and over this high, and then you're right into the upper Bollinger Band. In crude oil, the Brent versus the WTI. Well, the spread got apparently too cheap here in the 750 level. The differential between the two is WTI has gained. I'm sorry, Brent has gained on the WTI. I said it wrong, about $1 over the past week. As you can see, you've lost the embedded reading. I have not changed my opinion that often leads to price in the 18-day average ringing the bell on each other, and that's what I'm still expecting to see. Same thing in the WTI oil. I'm looking for that to happen right through here. Gasoline got up today to let's see, is that 113? Let me see, 137.61. And the 18-day average, 137.77, I guess about 15 points away from hitting it. And all this beautiful weather is just weighing on the nat gas. I gave away Bears tickets for the playoff just the other night that I had gotten from a friend. I didn't buy them. He was asking me to go with them. And because at first the weather was going to be in 42, 45. Now it's going to be up near 50 in Chicago. Stupid me. In any case, I want to tell you about our futures trading kit. Remember, last year I was telling you we were working hard on this, putting it together before Christmas came, and we got that all done. And it includes links, be it to the CME Group's educational brochures, different charting software packages, the two that we have for our customers. You get access to my research if you haven't tried it before as a trial to see what's going on through there. A whole list of things. It's great for the beginner or the guy that's refreshing himself in the markets. How do you get it? Give us a call. You can go to our website. It's free. Just sign up for it. We send you a link. It just opens right on your computer, or click up here. I'm Ira Epstein. Buckle in, buckaroos, because tomorrow is going to be an interesting day, especially now that we know that the House is going to deliver a plan to the president, and I think he just put out the gauntlet today again by marching everybody up in the news conference and saying how bad they need the border wall. Should be interesting.